Welcome back. Just keep an eye out on HDFC Bank. That's moved a little off the highs right now, currently mildly in the red. The stock has been doing well for the last few trading sessions. Let's see how that pans out in today's trading session. It has a fair weight on both the Nifty as well as the Nifty Bank. But the real estate space is on our radar this morning. Aditya Virwani, who's the managing director at Embassy Developments, joins us now. We'll be talking to him, obviously, on the company's FY26 guidance, any inorganic growth plans, more importantly, the impact of labour laws on the development industry as well. Thanks a lot, Aditya, for joining in, and welcome to the show. The FY26 guidance that you've given, for pre-sales of 5,000 crores and collections of 2,200 crores. The first half of this year, you've done 600, 650 crores on both pre-sales and collections. Do you stand by this guidance, or does it revise downwards?
Well, it's great to be here, and we absolutely stand by our guidance. I realize today we're standing at around 12-13% of where we are, but the Q3, Q4 has always been the big years, big quarters for Embassy Developments. And if you think about what we've done, we've taken over a company that's really been abandoned for the last 4.5 years. It does have a J-curve recovery, and we really feel that we now have entered a really moment where the company can launch, can deliver on pre-sales. And in fact, Q3, we already have 2 projects that are RERA approved. We have another one for Q3, and then 4 for Q4, which would be 2 Bangalore and 2 in Mumbai, 1 very big one in Worli.
Is that the Palais Royal project?
It's not Palais Royal. It is another project on Worli Naka, E. Moses Road, something that we'll bring to market in Q4. We're very excited of that product.
Which one is it? We're curious because
we're just down the road.
We're just down the road.
We are not the target audience, by the way, just to clarify. But we're down the road, so we just would like to know more.
Well, so this project is the last phase of the earlier India Bulls Blue project, although this is going to be its own project. It's Embassy Citadel, and it's going to be the first embassy launch in Mumbai, which we're very excited about.
All right. Bottom line, you're sticking to the pre-sales number of around 5,000 crores and collections at around 2,200 crores. Got that. Good to speak to you, Aditya, and welcome to the show. You're also talking about some inorganic growth, right? Help us out with some details on that front. Will it be a project level that you're looking at, or are you looking at, buyouts, buying out smaller real estate players in various markets?
Well, look, our focus is quite clear. We've actually taken over this company now, which has a lot of in-place land bank fully paid up for. We've also contributed some of that land from Embassy Private. And our focus right now is just to execute on the projects that we have in hand. We have existing ongoing projects that are quite exciting across the spectrum, premium as well as luxury, across Bangalore and Mumbai. And we have these new projects where we have so much surplus to unlock, roughly 51% of gross surplus that the company can unlock. So we feel we want to just put our blinkers on, execute on our plan, throw out cash, throw out surplus, and then cherry pick new deals. We do want to be there. We've done 1 deal last quarter. We are looking at new deals, but we want to be very, very selective, especially in a time where the market is so hot and you see land values go up. And we don't think that this same price appreciation at this double digits is going to continue. We want to be a little bit more modest as a developer, focus on the product, focus on good business principles, and that's what we're going to do as Embassy.
All right. So you're basically saying you'll do it at a project level, right? If you're this inorganic that you're talking about.
Yes, I think we're done with some major M&A activities. The merger was a big one for us. Now we want to just execute on a project level.
All right. A couple of other quick questions. Over the weekend, we got the new labor laws. If you could tell us, labor cost as a percentage of your mix, what is it at? And incrementally, in terms of cost of development, how much does it go up by? Most feedback suggests that it will be low single digits. So if you've done some rough math.
We think it'd be maybe low to mid single digits, the impact on labor costs. But I do think labor has been the biggest challenge in the industry. You're seeing a shortage of supply, mainly for 2 things. One is approval processes, and 2 is the availability of labor and the delays it's having on projects. So I think it's a fair thing that we should be compensating labor more. we have enough margin cushion to bear that. So we actually welcome this, and this is a very good thing for the industry, I would say.
So two-part question here. One, you said that there has been a bit of a shortage. There could be an increase of anywhere between 3 to 5% if I had to numerically put your qualitative numbers out there. And secondly, you said that you have enough margin cushion to absorb that. So does that, one, assuage the labor concern right now, the shortage concern? And secondly, does that mean you're not going to pass it on to consumers and take that on your EBITDA?
No, I think at least from an embassy point of view, we're going to take it on our EBITDA, mainly because all our projects are outright fully paid for. So we have a lot of margin to play with. We really just need to beat construction cost and then focus on paying off our interest and then take out surplus. So from an embassy point of view, we're in a very lucrative place. I can see if you're doing new deals where margin pressures come in, and if you're already paying fancy price on land, it'll be tough for developers to absorb all of that and not push it on. So I think we're in a very unique place.
Right, that makes sense. And you spoke about construction cost and interest. Let's speak about the interest bit. You have about 2,600 crores of debt. What's the repayment plan here? And with the GDP that is coming in going forward, how fast can you collect the money and repay the debt?
And so last quarter, we also raised 1,300 from Kotak. Right. For us, this is a one and done exercise. And what I mean by that is we have so much GDV to unlock, and we do need a little bit of equity to get going with it. Although they're fully paid up lands, you need money for approvals, you need money to get to a marketing stage, and you can't fully bank on sales funding construction. So this was important for us to top up a little bit on our debt. We still feel comfortable at a 0.3, 0.35 net debt to equity ratio. And we feel pretty good. We do want to come down from here. Maybe we top up small projects specifically, which will help us unlock more inventory. Okay. But I think over the next 3 years, you'll see the debt levels come down in this company. And we are just focused on execution, generating surplus and collecting.
All right. Final question before we let you go. Commercial GDV is approximately 8,700 crores. Could you help us out with what the exit rentals will look like?
So I can't talk too much about exit rentals today. We're so early on. But as Embassy, this is our bread and butter. We have executed on office. We have done the largest REIT in Asia by square footage. This is the expertise that we want to bring in. With that said, the market is just, the residential market is just 5 to 7 times deeper. So naturally, we will be doing a lot of residential. I see this company doing 20 to 30% of commercial at any given time. But the big focus is to come back in the residential space, as well as create these trophy-like REITable assets that we have been doing as Embassy. We are being very, very selective with assets on the commercial side. And we'll start building an annuity base in this company. And the journey is just started for that.
What would the target be at some point in time? Say maybe 4 or 5 years down the line. What would your target annuity income be?
So if you just look at our one asset that we have in Whitefield that has 5.5 million square feet, it's a land that we fully own. That would generate upwards of 600, 700 crores of NOI per year. We want to deliver that. We want to execute on that asset and then be very selective. Like I said, we can't just do any commercial asset. And especially now, as we see AI play an impact on jobs, we have to only have trophy assets. So for now, this is the only commercial asset of that scale, but we'll be looking at similar assets down the line.
Got that. Thank you so much, Aditya, for joining in and giving us a detailed outlook into your business. For starters, we'll be happy with you holding on to your guidance despite having done just about 12-13% of that in the first half of this year. And we'll watch out for the new launches that come about, especially in the Mumbai and other regions. With that, we'll take your leave and also get you another segment coming in from